Welcome to the 40 to 40 podcast. Join me, your host John Weiser, as I explore life 40 degrees south of the equator. Welcome to episode 8 of the 40 to 40 podcast. I am very excited to do my first remote interview with Kevin Stamba, a friend from high school. So Kevin, thank you for coming on and helping me with the podcast.
Absolutely. Glad to be here.
Yes, sir. So Kevin and I went to high school together, and I have not seen you that much since high school. I don't know, at least 10 years it feels like. I saw you this summer, but before that was maybe 10 years. I don't know.
Yeah, it's been a while, hasn't it? Yeah.
Anyway, one thing I've been liking to do with the podcast is to kind of get a chance to look at the professional development of all of my guests. Because especially for the next generation, I like the next generation to be able to look at people and say, if I want to arrive to this position in a company, or if I want to arrive to this achievement of having a house or having a car or having a family, look at people who have done it successfully and then say, hey, that's more than one way to get to that end. So could you kind of give a brief overview of basically your development from high school to where you are now?
Yeah, I'll try and make it pretty quick here.
Okay.
I actually got into a company as a truck driver, ironically.
Okay.
Just driving and delivering mail and shipping like boxes. And so I worked up into that company until I became a material handler in the company, where it was a chemical company, so I would handle chemicals. The company's called Lubrizol. It's a Berkshire Hathaway owned Fortune 500 company. It's based in the Northeast Ohio area. I went from that to chemical blending, to blending those chemicals, which the chemicals are for transmission fluids, engine oils, lubricants that you use in your car, or like tractors, 18-wheelers, all that stuff. And then I worked from there to go testing. So I went into testing, lab tech stuff. So that obviously has nothing to do with finance, right? So how did I get finance? So I was always interested in finance, and I had a really good department manager who let me kind of sit next to our accountant that was doing stuff. I got interested in it. I started to actually learn about it and went over to the accounting section at this company. I started as just doing payables, like paying bills, that kind of stuff, right? Then working my way up through costs. And then I worked through the cost area, went into more the financial sector. So we did some financial planning for an expansion that we were going to do for the company into another country. We had had an incident in the country, and we were trying to learn how to maybe look at putting another factory there and what that would look like. So I got some financial planning into that. I'd always known I wanted to start my own financial planning practice and business, but I didn't know what I didn't know. And I always knew I needed some kind of background. So that's why I was trying to get it at the corporation that I was working in. So I did learn a lot about finance, how things worked, the accounting aspect of finance, which is important, I think. And from there, I went out. I went with another company at the time that was good for starting. So they kind of helped set me up, get ready. And I learned a lot through them. But ultimately I ended up going with a different company after them because I found out some things that were just not so great. So from there is where I'm at now. And I've been doing this for years now, helping families, helping small businesses, doing planning, budgeting for families, businesses, and also doing investments, advice, that kind of stuff. Basically, whatever in the financial realm people may need is what I've been really trying to specialize in, and have been doing so for about 3 to 4 years now.
Okay. And I think you went to college, right? What did you study?
Yes. Sorry. I went to Pensacola.
Okay.
I went to Pensacola Christian College. And then I actually went for criminal justice, of all things.
Oh, okay.
Yeah, so not really anything with finance.
So you went to college for something very different than what you ended up doing. What is your feelings on that? Do you feel like it was wasteful, or do you feel like you had a good experience that it still helped prepare you professionally?
That's a great question, because I think you can look at it glass half full or glass half empty, right? So I kind of feel like over time I did really appreciate the experience of it, because I learned a lot more than just the curriculum, just the laws that we were studying, of course, with criminal justice and all of that. You learn a lot more when you're on your own of who you are and who you um, like, what makes you tick, what makes you you, and it's really good for you to get out there and learn that.
Yeah.
For me, that was the first time I was able to do so. So I kind of look at it as it was a growing experience for me.
Yeah.
Uh, and it was beneficial ultimately.
Good.
So
Yeah. But I think as long as you can do something like that without going into a tremendous amount of debt, like you said, you're going to have benefits, even if you end up going a different direction.
absolutely, I would 100% agree, especially without the debt.
Yeah,
That's good.
exactly. Yeah, yeah. So I did a really bad job introducing you. So you are doing financial planning now as a financial advisor.
Yes, that's
Okay.
what I'm doing
Okay.
now. Yes.
And one of the reasons I wanted to bring you on is because this summer I heard that you were doing a podcast. And so can you tell me a little bit about your podcast, how long you've been doing it, what the topic is?
Yeah, so we call it the Financial Feast podcast. It's me and another guy that are both passionate about financials things. But basically, what it is we're assuming that people are wanting to know about like personal finance topics. So we talk mainly personal finance, a little bit investing. We also talk a little bit about career stuff, but the majority of our bread and butter is topics like inflation, budgeting, how to handle different things that come up economically and financially in an everyday situation, at home or whatever the case may be. And we really just focus in on that and try and help others that may be in a spot where they just don't know what they don't know, and we're trying to be that bridge of education that maybe they can learn something from it.
So I have to ask you, with being a relatively new podcast person, what was some of the biggest challenges with being a podcaster, and what do you think are what has been one of the most rewarding things as well of having a podcast?
Oh yeah, so we started our podcast in January of 2023, so we had our 1 year anniversary already.
Yeah.
The first challenge was just, is this microphone even working?
Right.
Is like, how do I upload this? How do I get people to find it? It was a little rough at first, but the rewarding thing has just been, you can look back, we get comments from people that have appreciated some of the stuff, and it's really rewarding to know that you're helping others, and that's really what it comes down to for us, that we're giving them free help, so to speak, right, through a podcast that um, they can learn how to become better at finances, become better at budgeting, become better investors, all those things.
Yeah.
And it's just really rewarding in that end.
Yeah. Yeah. No, I think it's awesome because like people say time is money, and there's some truth to that, right? And so
Yes.
when people are struggling with money, when they're struggling with not having enough of it, like it's really, you feel like you're struggling with everything in life if you're struggling with money. Because it's like, I don't have enough of this, I don't know what to do with my time to earn more money. It can become the biggest things for ruining marriages. It's a really big deal. So if you can help people to feel stable in that way, so they can control their time, control their money, and be successful, that's awesome.
Yeah, it really is. It's so fun. I love it.
Yeah. Awesome. Awesome. Okay, cool. So as you know, I've started doing the 40 to 40 podcast, and the idea essentially is this connection between 40 degrees north and 40 degrees south. So
I love it.
experience 40 degrees north. My wife has her experience 40 degrees south. We've met, we've become a family, and now I have a chance to live 40 degrees south. And so I wanted to grab somebody who's an expert in these topics, or becoming an expert in these topics, in these investment and personal finance topics from the United States, and kind of share your perspective on these topics, and then what you know of some international investing topics as well. So my first question for you is just, if you had to summarize your perspective towards financial investment in a couple of minutes, how would you, towards personal finance in a couple of minutes, how would you do that?
I would just say, in a nutshell, personal finance is just how you personally handle your money and and how your income and expenses all come together.
Okay.
And it's in its most basic sense. That's what personal finance is to me. And then obviously there's a lot of layers to that you can dig into, but money is emotional. So a lot of people are very emotional with it, and you need to know how you connect to it emotionally as well.
Okay. So it's a big focus then on control, the self-control of the emotions of
Yes,
basically income and spending.
absolutely.
At the simplest level.
Yeah, because I mean, we're the most advertised generation in human history with everything that comes at us, right? So it's very easy to lose that self control and that self discipline when you have everything bombarding you from all angles and you have all these opportunities. And how do you make sure that you're, grounded, right? And you have a plan, you have a basic basis for everything that you do. And then from there, you build it out and you make it to be um, something that works for specifically you and your family, whatever the case may be.
So there's definitely a psychological aspect, like a self-improvement aspect, or
Yes.
getting to know yourself. Okay. And so have you read books on like psychology or change management, like, as part
Yeah,
of those people? Or
so yeah, I actually have done a few of those. I
okay.
had some. Um, it's always been fascinating to me how the human mind thinks because it's so fascinating that we're all, humans, but we all think and tick differently,
Okay.
and we all bring that unique knowledge together, right? And but when you're working with people, you can't just do a one size fits all thing because it just doesn't work, and you have to understand, like, as a financial planner or someone who's doing financial planning, I can't just walk in there and be like, well, obviously, here's what you got to do, because in their mind, most people's perception of money is from their parents
Right.
and how they handled it, right? So they're coming at it from that angle. They don't have all the information right now. So your job is to provide them that information, but do it in a way that it best fits their circle, their well-being, like where they're at right
Yeah.
now, right?
Yeah. No, that makes,
So
I think I was a little surprised by your answer, because I think my approach is like, for me, what are the tools? What's the steps? Right? Like boom, 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 and then you take it, and you throw it at somebody. And I kind of liked your approach, because it was like, there's like an emotional, psychological understanding that has to happen first, almost, right?
yeah, and actually, so you're coming at it from the perspective of an engineer, right? You're the
Sure.
logic analysis based, right? And
Right.
like when I work with those guys, that's 100% what I do. I do very logic analysis based things because it resonates with the logic thinking, right?
Right.
And of course, that's going to work, but not everyone thinks that way. So you got to remember, like, you can't just be like, obviously, with analysis, I have these formulas, I have this data right here. Obviously, this is what you have to do. Like that doesn't always work, right? So you gotta understand how they think first, what makes them tick, and so that way how to kind of approach a plan for them, and that way it'll stick, right? You're not just giving them something that, of course, it might be great, but if they don't like use it, then who cares, right?
Understood. Yeah. No. Perfect. Yeah. Engineers are not known for their empathy, I suppose. And so, no, I like that answer for personal finance. So my next question then is: you're consulting people on personal finance. Part of that is when you start saving money. What's your
Yes.
general approach towards investment when they're at the point where they're ready to start doing that?
Yeah, so obviously you want to try and get especially the younger people into investing as soon as possible because you have the law of compounding over every 7 years, your investment will double. So you want to take advantage of those 7 year periods. So we obviously want to get them there as fast as possible. There are some things though that I recommend that need to be done before you start investing. You should have some kind of a savings of, if you can have up to $1,000, that's great. That's what I'd like to see. Because the problem that I have with some people is that they want to go right into investing, and that's great. There's nothing wrong with it, but they're living paycheck to paycheck and they're barely making it. And if you go into investing, chances are pretty big that if something bad happens to you, like even something as simple as like the fridge breaking, you're gonna have to take out of that investment and pay for it. Or you have to put it on credit, which, if you're already living paycheck to paycheck, you're in a dangerous position, right? So you're going to be making that debt go higher. And now you're investing and you have debt. And so there's a lot of stuff that goes there, right? But in a nutshell, I would say invest as soon as you can because it is so good to do. And I'm very pro index funds, not so much mutual funds because of the fees. I don't like those. But index funds are where I like to steer most people. Obviously, if you know more about investing and you're a lot more savvy about it, there's other things you can do too. But for the average person that doesn't really know what they're doing and just wants to get into an investment, an index fund is the perfect spot for them.
Yeah. Yeah. No, I actually was listening to your episode a couple weeks ago, I think, with Paul Merriman, who has a similar approach. And I thought that was awesome that you were able to get Paul on, and also that you're your approach toward investing was aligned with his. Because again, coming from my engineering background, Paul has these tables where he was like, if you look at the past 70 years, you just make a strategy for a 40-year strategy over the past 70 years, there's no point where that 40-year strategy would give you less than this return. And I'm like, okay, I'll do that. Like it's
Exactly.
very logical. So I like that approach, and I also like how you mentioned about the foundation first, because if you get started in investing without the right foundation, you can end up hurting yourself more, I suppose, if you have penalties for pulling out of a 401k, or
Exactly.
if you invest in the market at a high point and it goes down and you have to pull out when it's low, then you're really using the tool the wrong way.
Yes. Yes, 100%.
Okay, so what do they call it? Low expense fund. The index funds would be your
Yes.
go. Yeah. Okay.
That's the number one spot I would recommend starting.
Okay. All right. So I got a little bit of a base of your approach for both personal finance and investing. So a little bit about Argentina. Inflation in the United States became a bit of a topic after COVID with all the government spending. There was more money, and so there's this huge supply of money, and we're out there buying stuff, and there's a low supply of goods, and the price goes up logically, right? In Argentina, it's way worse. So the last 12 months, I think it was 250% inflation at its worst. So I did Argentina in March of last year, and I was paying 380 pesos to buy $1. That was the exchange rate, 380 to 1. And then last month, the exchange rate was 1,200. So it had gone up almost 3 times. And then what's really strange in the past month is the exchange rate has actually gone down from 1,200 to 1 to about 1,000 to 1, because the government's doing some things to make the exchange rate more real. And so the real exchange rate, the official, is starting to meet with the unofficial one. It's a whole confusion. But I have an episode about that, so if you're curious, you can watch it. But it's just about inflation. What is the American perspective towards inflation, and how would you prepare your clients to protect them against inflation? And I'm kind of curious what we can learn maybe for Argentine investors as well.
Yeah, so inflation was a big topic. I was talking a lot about it with a lot of my clients in 2021 and 2022. There's a lot of things you can do to protect against it. You want to, with every crisis, so to speak, there's an opportunity, and you got to just find that opportunity. So you just got to look, what sectors do really well when inflation hits, right? So you have healthcare that does pretty well generally in inflation, because it's something that's always going to need to happen regardless if money is more or less. Consumer staples don't change. So you can look at consumer staples that everybody always gets: bread, milk, water, eggs, that kind of stuff. The stores that carry those things. Real estate, that's something that even when inflation is high, it directly benefits real estate, because real estate also goes high. So it's kind of almost a hedge that you can get. But you could argue that, the average person doesn't have an extra 200K to go out and buy a house in America. So you can do something called a REIT, which is a real estate investment trust. The nice thing about those is that it's kind of like a pool of different real estate assets all together, and they have to pay out 90% of their net earnings to anyone who owns it. This is traded on the market itself generally, and you can invest into many different REITs. There's a ton out there, but they do pay pretty well, especially during an inflation period. You can also get what they call Treasury invested protected securities. This is also known as TIPS. Actually, anyone can buy them in any country. So this is something people in Argentina can do too. You can fill out a form on treasurydirect.gov, and then you can basically put in your information. You can buy however many TIPS you want, and then hold them. There's a holding period of 6 months before if you hold them for at least 6 months, there's no penalty if you sell them, basically. And then every 6 months they get reset to the inflation rate that there is. So TIPS themselves are a great protection against inflation, because if inflation is high, the interest percentage you'll be getting back will also be high. And that way you can kind of hedge against that. Also, another sector that's actually historically people don't really think about, but has actually gone up a lot during inflation, is actually wine.
Right.
Um, Wine sector is always something that typically you don't want to ever do any luxury anything, especially cars, especially that kind of thing. But for whatever reason, wine is something that those companies just still do well during all these periods of inflation. You could argue it's because it's kind of an obscure number that they use to sell their stuff. Like obviously there's a lot of analysis and market analysis into it, but it's very much the marketing that sells wine more than it's the wine itself.
Right.
And because of that marketing, they're able to kind of be able to protect against inflation because people don't want to give that up. For some reason, that's one of the sectors there that are good. And then also bonds. Bonds is a pretty good one to do during inflationary time. It's typically what a good financial advisor will do is have you in both stocks and bonds for retirement. And then because bonds are considered less risky, if the stocks are going way down, hopefully bonds are kind of helping hedge. Um, and then I guess things to not invest in
Okay.
would be those luxury materials. Don't go anything into industry like manufacturing because those generally get hit pretty hard with inflation. Um, and then materials. At first, there'll be a spike in materials, and then they'll go down as the demand wanes. So you don't want like the steel, the coal, those kind of materials, right? You're talking about resources for making things because there won't be that demand to make things with inflation.
Right.
Not yet.
Right. It's got to readjust. Okay. No, very interesting. Um, like it. So in Argentina, it's very different from what I can tell. In that I don't know there's so much availability to take their savings in U.S. dollars and invest in all these opportunities. But what they do have some of the same principles in that what is one way that people save money when you're going through a crazy kind of inflation? They'll buy a piece of land. It'll be a piece of land that they have no intention to build on, but it's just if you have $20,000 and you don't want it to disappear, if it's in pesos, you can buy a piece of land. And like I said, you have no intention to buy that land, but you're going to hold it for 2-3 years until maybe you're ready to buy a car, and then you can exchange that land for the car. And so it's a similar principle. It's just that the tools maybe that are available here look a little bit different. But yeah, essentially you're turning land into some kind of like you almost look at it like it's a currency almost, right? Because
Yeah.
it's like, I want to buy something, somebody hand you this land. You give a land to somebody that no one, that person is not intending to build on it either, right? And then they give it to somebody else. And so it's just a way of passing value around. And it's not actually the way that we view land, which would be, for farming or for building, right?
Yeah. It's like an asset in itself, almost like a real estate hedge without the real estate on it, then
Yeah. Yeah.
more or less.
Yeah.
Interesting. That is interesting. That is different. But I could see why it would work.
Yeah. Yeah. Because there's some value associated with it always, right? But okay, so then next question for you. If you so I've been talking a little bit about the opportunities in Argentina. So in particular, where I'm living in Neuquén, it's kind of an oil boom right now. We have the Vaca Muerta Basin, which is one of the biggest shale oil and shale gas basins in the world. And so there's going to be a lot of foreign investment. There's going to be a lot of growth kind of guaranteed for the next 20, 30 years. And so it's a little bit of a bubble. Now, I'm talking about these opportunities. If there's an American listening who says, oh, wow, I see these opportunities in Argentina, maybe I want to try to invest in Argentina. What are some mechanisms that you're aware of for someone to invest in a specific foreign country? Are there opportunities for that?
Yes, there absolutely are. I was actually looking specifically into Argentina. So I did find a couple of index funds that they have.
Okay.
That they have ones under the emerging markets, mainly specializing in Argentina. It's run by JP Morgan,
Okay.
Chase Bank. It's called ESEB is the ticker that you can invest in the US. Also, there's one called ARGT, Argentina. It's the actual Argentina ETF, which is exchange traded fund. So we're talking about like a conglomerate of different companies together, which makes up a fund generally. So for those that may not know, like the S&P 500 is 500 different individual companies that all make up the S&P 500, and it's used as an index to kind of basically tell market health, right? So you're looking at if the S&P is up or down, in a quick glance, is the market doing well today? Is it not? And it can measure market health. So there are a couple funds that Argentina is mainly in with ARGT and ESEB that I found. I will say I haven't done much digging into the fund itself. I just know that they are available. So I
Right.
don't know.
You're not recommending them. You're just
Yeah,
saying,
I would say I'm not recommending them. I haven't done any like research at all. But
well,
there is that. There's
yeah.
also other than ETFs, there's also what's called an ADR. I don't know if you're familiar with so it's an American depository receipt. So let's see. So how it works, I'm going to simplify this as much as I can, okay? So how it works is a company is based in another country, like cool country like Argentina, right?
Right.
So they decide to issue what's called an ADR, an American depository receipt. Think of them as kind of like tickets that represent shares of a foreign company's stock, but they're traded on the US stock exchange.
Okay.
Okay. So this could be like the New York Stock Exchange or NASDAQ. Now, Americans can buy on the New York Stock Exchange, NASDAQ, US stock exchanges of these ADRs. Okay. Just like they would any other US company stock. If there's a dividend or anything from the foreign company on this side, it does get paid to the U.S. side. The U.S. Stockholders do get that dividend. So what it does is it incentivizes. The reason why it's a good thing for both parties is it allows the U.S. to indirectly invest into Argentina. It also allows Argentina to get money from the U.S. for their company, right?
Right.
So they're called ADRs. They're kind of like tickets that let you own and trade shares of foreign stock on a U.S. exchange. So that's basically what it is.
Okay.
In its most basic sense. And it does get a little complicated if you dig in a little farther. They have different levels of ADR, so to speak. And then there's also sponsored and unsponsored. So you want to really kind of look at the pros and cons of them, of course. But as anything else, the deeper you dive, the more information you get. And it's always fascinating. It's always interesting. But they are real and they are a legitimate investment that you can do into foreign countries. And Argentina is one of them that you can use it for.
Okay. No, very, very informational. I was not aware of all those options. So, for example, the JP Morgan fund, is that something that somebody who has a Fidelity account could probably find that fund?
Oh, yeah. Yeah.
Yeah. Okay.
Usually, if you have just your own E-Trade account, you can
Okay.
probably find it. Yeah.
Okay.
Or your own basic investment account at some point. Yeah. It's out there for sure.
Okay.
You could find it.
Well, that's interesting. I was a little surprised that you can invest that specifically in Argentina from the United States.
Yes.
Okay. Last question for you. Are you aware of any clients from you or from colleagues, clients that you or colleagues have who are based outside the United States? Let's say a wealthy person from another country who wants money invested in the United States and mechanisms for doing that. Are you aware of that happening?
So there are, especially as people it's diversifying, right? So you want to diversify your income stream. You want to make sure you get it to other places so that if one goes down, the other one can hold it up. And that's the whole point of investing is you want to keep it diversified. You want to keep it across multiple platforms. So as people make a lot more money, they do tend to want to look at other opportunities, especially international, because international is considered, in America, it's considered a more risky but high reward situation in most cases. So there are people that do look very hard at most of it stops at funds. So they're looking into international funds. Maybe they do maybe they do an ADR, the depository receipt, and they can look at some other stuff. But most of the time, these people are investing a certain percentage into just an international fund, but they specialize that fund into maybe emerging markets in a specific country, or they specialize it into small cap, which is under a certain number of dollars for the companies, right? So you're looking at like $1 billion or less, or 100 million or less, or whatever the case may be for that country's definition of small cap.
Right.
And overall, the majority of it is mainly the exchange traded funds, but there's also some commodities as well. So you have like gold, silver, oil, especially oil in other countries is cheaper or more expensive depending, right? So there's some play with that. But in general, most of what I see is just people investing into international funds altogether. To me, it's a little more risky, um, a little more high reward. There's also, I believe there's 26 different stock exchanges in the world too.
Right.
That's another thing to think about. So like England has one, England has two, I think. Hong Kong has a big one. China, of course. All these developed countries, Japan,
Right.
Switzerland, France, Germany, all these countries. So you got to think about it. If all these countries have their own stock market, of course they have a bunch of companies that trade on it, and of course there's all those opportunities out there, right?
Yeah, yeah. So you were answering that from the perspective of an American who wants to diversify even more for the international fund. Uh,
Yes.
no, that makes sense. But how about the question though for somebody in Argentina who has a lot of money? Are you aware of any ways for people outside of the United States to invest in the S&P 500 or invest in the United States?
Yeah, so there is ways that they can invest in the S&P 500. Typically, they'll have to go to their country's stock exchange, and they'll have a U.S.
Right.
S&P 500 fund right there, and that's the number one way. You can also do the ADRs as well, and
Understood. It was
bonds and
basically
treasuries.
the same tool
So
that you said that someone would use on
yeah,
Fidelity or E-Trade. You would have to find that platform in their country, and then there would be the same options on that platform to invest back into the United States.
yeah, absolutely.
Okay. Now I wanted to do a little research on that because I have some people asking me that because a lot of people in Argentina are interested um, in opportunities to invest in something better than just holding U.S. dollars. And unfortunately, what happened is with the last government is with all the inflation and with all the controls on not letting people buy dollars, uh, the unofficial rate grew and grew and grew, so it became more and more expensive to buy dollars. And people were saving in dollars, but they were saving in dollars in the black, they called it, right? So they're unofficial dollars. So they're being kept in their house, or they're being kept in a safe box in a bank. But those dollars, you can't just walk to the bank and say, "Hey, I want to give you $10,000 so that I can do a transfer to the funds to this platform," because that would be a money laundering or risk or something, right? And so,
Right.
what needs to happen in the next years with the new government would be freeing up all these dollars that are in black and allowing them to become part of the banking system again, so that people have the option then to take this money and send it to a trading platform, so then they can invest it in a better option than just keep it cash. Unfortunately for Argentina, I need to do more research, but unfortunately for Argentina, I think that's one of the biggest challenges right now is how do you get your dollars official in the bank so that you can transfer them to a platform where you could invest.
Yeah, that actually is a very big challenge. I'd be curious if the Treasury Direct website allows you to just do it all online,
That would be
and you
interesting.
can bypass I don't know though, but I'd be interested to see if they could bypass the actual
Yeah, you would still in some way, like I don't know,
you have to have it deposited somewhere.
or
It's a US bank account or a Swiss bank account, and then you can go
something.
like all the way around. But yeah, I don't know.
I don't
There's
know.
a way to do it. I know that there's got to be, but it's got to be complicated.
Yeah, a little bit complicated. I think like for example, when I first came down here, crypto is one way that you can
Yep.
transfer some money. So if you buy crypto in the United States and then you have crypto which you can use anywhere in the world, you can transfer that into pesos down here. So like crypto is one mechanism. Um, but yeah, it's a challenging environment down here, a little bit different than the United States.
Yeah, definitely. It sounds like there's some good, hopefully, coming of it all. So it'd be
Yeah,
good to see it on the other side
I
coming
am
out of this.
optimistic. Yeah. So Kevin, if anyone was interested in getting help from you or from following you, what's the best way to do that?
Yeah, so we're on social media, Instagram, Facebook, slightly on YouTube. We've kind of gotten off of YouTube, but we're still there in spirit, right? Um, but yeah, you can reach out, DM. It's the Financial Feast Pod is our um, social media page. You can find myself or my other co-host there, Zach, and we talk every Wednesday. We have an episode dropping at midnight, so Wednesday morning it should always be there.
Awesome. Awesome. Well, Kevin, thank you so much for coming on and sharing both your professional development and also sharing some of your expertise on investment and personal finance options.
Absolutely. Thank you for having me.
Awesome, man. I really appreciate it.
Yeah, not a problem. You take
All right.
care.
And to the listeners, thank you so much for listening to me. I'll be talking to you next week. Thanks. Goodbye.